I'm gonna kick this off. Very excited to share this panel with you all today. My name is Hani Azam. I'm the founder of Viaka. Just a request for people who are joining in the audience to mute yourselves if you don't come in on mute. This panel feels very timely to me. It's no secret that raising capital for early stage startups is much harder right now than it was 2 or 3 years ago. And so we organized this Viaka Roundtable, which I'm going to moderate, to have a discussion about what a founder should have prepped before they go out for their first fundraise. Before introducing the panelists and getting into everything, I just want to have a few quick introductions. So first and foremost, for those that aren't familiar, Viaka itself is a growing network of nearly 800 founders, investors, and operators across the world, but who all share ties to the Middle East and North Africa. We connect this network via in-person mixers, dinners, other events, as well as virtually over Slack, WhatsApp, direct email introductions, anything we can do to connect our members with each other. In a couple weeks, we're hosting our next in-person event in Paris, and we're partnering with an organization called Digital Africa on that. So would love to welcome anyone in the audience, any friends you might have in Paris to join us for that. We also host virtual sessions like this one, where we get to showcase the talented founders, investors, operators in the Viaka network, and the expertise and knowledge that they hold and contribute to our community. You can find us very easily on LinkedIn, Twitter. We have a weekly Substack newsletter as well that we send out, where we keep members of our community up to date with our event calendar, and also with events that other organizations are putting on that seem relevant to our members. So we'll drop all of those links in the chat shortly. As we move forward, I want to just hand things over to a few organizations that made today's event possible, starting with Spiky AI. So, Waleed, do you want to jump in here?
Sure. Hey, everyone. I'm really excited to be here and excited to hear more about what our speakers are talking about today. We're sponsoring this event because we truly believe the impact that Viaka is making and has been making, and we're always glad to be a part of it. Just to give a brief background on myself and Spiky, I'm the head of growth over there, and we basically are the #1 sales tool that improves sales and customer outcomes. We help you scale behaviors that win deals to 2 times your revenue, and we do that through live sales insights, immediate personalized coaching, and automation. What this essentially means is, hitting 100% of your sales qualifications, large percentage of increase in deals won, and basically hours saved on non-revenue generating tasks like follow-ups and opportunity management in a CRM. We're basically trying to lead to one overarching goal, which is providing all sales teams revenue growth. And what Hani has on the screen right now is just a glimpse of our real-time feature that helps individuals and teams on their calls in real time. We've seen that this helps teams get a 93% playbook adoption rate, which leads to 42% more in revenue because they're able to optimally navigate these conversations through real-time engagement and intent tracking, objection handling, and playbooks. I'm always happy to speak more with folks about our solution. I can drop the sign up link in the chat for anyone interested in exploring more. And if you have any questions, feel free to reach out to me on LinkedIn, email, or whatever. But yeah, anyways, I'll stop talking and keep the show going. Thanks for having me all.
Thanks so much, Waleed. Next up, I'd like to turn it over quickly to you, Megan, from TAP.
Hey, thanks, Hani. Hi, everyone. I am the head of business development here at TAP. I'm currently based in Berlin, but accent is Irish, in case you all don't notice it. TAP is a social impact company first, but we are a careers business based in Palestine and spread across Europe as well. We train and upskill high potential talent across digital marketing, sales, and software development. And then we connect those graduates who are usually based in Lebanon, Jordan, and in now soon Lebanon, where we launched this month. And we connect them to global remote jobs worldwide. Our goal is to bring as much remote jobs to those who really need it the most, and in particular to facilitate the economic development through jobs in Palestine. I have loads I would like to say, but again, we're just happy to sponsor this event. We're a VC-backed business ourselves, always looking at new inventive ways of fundraising, and always looking to expand our network across MENA and the world. So similarly to what was said previous, I'm on LinkedIn, email, Telegram, every way you can find me, I should be there. So feel free to connect and follow up with any questions you may have about TAP. Thank you.
Awesome. Thank you, Megan. Fadi, I'm going to bring you up next to talk about Supportful.
Thank you, Hani. Hello, everyone. I'm Fadi, the founder of Supportful, a software staff augmentation company based out of Lebanon. So we typically work with tech startups, helping them build MVPs and teams by providing them with remote engineers who act as contractors within the team. We're also an impact startup. So what we're trying to do is to reduce the brain drain in Lebanon. And we function as a remote company because we want everyone to stay in their hometown and contribute to the economy in the community where they live. So a snapshot of the services that we provide to startups is in the slide in front of you, and also available on LinkedIn for any help. Thank you.
Thank you, Fadi. And Hala, can you tell us a little bit about Heal Palestine and the work that they're doing?
Yeah, thanks, Hanya. So, hi everyone. I'm Hala Al-Tahir. I'm part of the Kassim Legal team. And as part of sponsoring this event, we'd like to take the opportunity to encourage everyone to donate to Heal Palestine. Heal Palestine is a nonprofit organization that provides educational, health, and healthcare support to children in Gaza. The organization is currently treating 18 children from Gaza in the US, and they've also set up a field hospital in Palestine to directly address the medical crisis within the Strip. We would really appreciate everyone's support and contributions to Heal Palestine these critical times. We've posted the link on all the posts announcing the event. Thank you.
Thank you, Hala. Yeah, so appreciative of all of the sponsors here, just making this possible and also doing amazing work themselves. So thank you so much. Quick introduction of our panelists themselves, and we'll get started. If you're in the audience and have questions, please drop them in the chat throughout the conversation. We'll try to cover them as the discussion goes on, and also if there's time at the end of the event. So Hisham Kassim is the managing partner of Kassim Legal, a family-run boutique law firm specializing in cross-border M&A, venture capital, private equity transactions, and international tax. Next up, we have Rawan Badur. She's the co-founder of Zest Equity, a technology startup building infrastructure to streamline and digitize private market transactions. Sarah Rona leads Silicon Valley Bank's operations across the UK, Europe, MENA, in the Australia, New Zealand region. She supports tech startups and VCs from those regions as they look to tap into the American market. And she's been an immense supporter of Viaka in the MENA region's tech ecosystem at large. And finally, Mukhtar Ibrahim is an investment principal at Beko Capital, where he specializes in early stage investments across verticals, including fintech, logistics, and B2B SaaS. So we're really excited to have such an esteemed panel. And we're going to take this kind of as a conversation, just cover like today's fundraising environment, what founders need to be prepared for, what they need to prepare when they're going to speak to investors. And we're really excited to dive in. I'll be moderating the conversation, as I said. And I think we're ready to get started. I will just bring up everyone who is participating and pin their videos real quick. Sarah, while I'm doing that, I know that SVB recently released its second half 2024 State of the Markets report. Could you kind of tell us like what the bank is seeing and hearing about the fundraising environment? Of course, would love a particular zoom in on MENA if possible, but also just to hear about the VC and early stage startup environment in general right now.
Yeah, absolutely. Thanks, Hani, and thank you everyone for having me today. I'm actually going to paste the State of the Markets report in here so you guys see it. But yeah, so I think there's a couple of things that are sort of happening at the moment. So in the US, there's been a calibration in the market as we're seeing high interest rates, though pending a decrease later this month and another one further out in the fall. It's really just resulted in tighter budgets and slower startup or scale up growth. Investment is down, but with that said, it's higher than 26 of the last 30 years. So I think that some people really lose sight of that given the 2021 COVID valuation highs that we saw. But at the end of the day, deals are still getting done. There's still some dry powder on the sidelines that's waiting to be deployed. At the later stage, we've also seen a backlog of US-backed tech IPOs. Just 5 of them dared to go to market this year, public markets. So performance was a bit mixed. We saw Reddit was the only one that was trading up since going IPO. One thing to note that we've really seen is that time between rounds. So in 2021, many companies raised up rounds after just about 12 months. Some even shorter time spans than that. We saw some within 6 months. But now that velocity has really slowed down and is double that time, if not more, to that next cash injection. Lastly, as it pertains to the US, AI is definitely the buzzword of 2023, 2024 across the board. AI companies are accounting for 26% of deals and then 40% of capital invested. So those numbers really just speak for itself. As it pertains to MENA, I think, KSA was absorbing a lot of the buzz as well and deployment of capital, though UAE is catching back up these last few months. As an overall region, it was definitely a slow start to the year, but just in July, investment surged by over 200%. This is according to some of the latest numbers by Magnet, and I think Wanda just published some stuff as well. It's exciting to see that Egypt is making a comeback after the currency devaluation, and just overall from a sector perspective across the region, fintech, it's definitely, leading the charge. So I'm feeling incredibly bullish for the second half of 24 as it pertains to MENA and the US as well. There will be a lot of things at play with interest rates, an impending election, but, fingers crossed, and hopefully, things are smooth from that end. But that's sort of what we're seeing. I pasted the State of the Markets report, which is a pretty consolidated overview that you guys will see in there. And if you have any questions, feel free to give me a shout. But hopefully that covers a very high level overview.
Yeah, I love that. And I'd love to open it up here from the other panelists as well, because, you three are very focused, obviously, in what's happening specifically in MENA. Are you guys also kind of like bullish on the remainder of the year, the beginning of next year? Or are you still feel like there's a lot of headwinds?
You better agree with me. Just kidding.
No, I definitely, I think from my side, looking at the deal flow, I think there's a lot of interesting stuff coming about. I think a lot of the startups initially in some of these sectors have built a foray of infrastructure projects that will allow other startups to start to spring up. I think the exciting part of the remainder of the year and the beginning of next year is that we'll see a newer level of innovation, right? A lot of people were talking about business model digitization, copycat models of global products into localized models. I think we're going to start to see towards the end of the year and the beginning of next year, more innovative startups starting to come about as the ecosystem matures.
Nice. Okay. Yeah, plenty to be excited about. Hisham, I guess, like thinking about these folks who are getting ready to make the plunge, they see opportunity in this environment. There's a large enough problem to go after. If we get kind of down to brass tacks, like from a legal perspective, if I'm thinking about starting a company right now, when is the right time in that life cycle to actually like incorporate my business? And also, how do I think about where I actually incorporate? I know for founders in MENA, there's like a variety of options, and there's a lot of different jurisdictions that people might use.
We actually have too much choice in MENA, so people sort of get bogged down on where to register. But I don't think you can incorporate early enough. You can always incorporate as soon as you have an idea. You just don't have to spend a lot of money doing it. You can use one of the online service providers, pay a few $100s, you'll have your company up and running. As you raise money, as you mature, then you move up in the service ladder. Then you get a law firm and a lawyer, but I wouldn't start right away sort of spending a lot of money on legal until you know you have a product, you have product market fit, there's some investors interested in whatever it is you're selling. In terms of jurisdictions, we'll drop the sheet because we get this question like 3 times a week, where to register. We have a chart that compares Delaware against the tax haven jurisdictions, which are BVI Cayman and ADGM. And the pros and cons of each one, we like Delaware for most SaaS and marketplaces. There's great payment integration. ADGM and Dubai, and DIFC, they tend to be more expensive, more cumbersome, and the tax haven countries have their reputation keeps going down and down. So we're sort of pushing as much as we can for people to incorporate in Delaware. Maybe Hella can drop it in the chat, our sheet, and then you can just download it. It's a PDF. It has the cost, the running cost, whether you need an office. It's got 15 different variables for each country. That's
Yeah. Okay. Amazing. Yeah, that sounds like a really great resource. So let's definitely be sure to share it with the audience. Rowan, I'm kind of interested in, the founder perspective here. It's one thing to have an idea, register your company. It's another thing to kind of make the determination, I actually want this company to be a startup that's venture backed, et cetera. Like, how do you think people should go about the decision of actually raising external capital? What does it mean to be like a venture backed startup as opposed to, just a business or a small business, I guess?
So this is a good question, and I think anybody you speak to will likely have a slightly different approach to fundraising. But for me, and again, from personal experience and from what I've seen over the years, the first question I tend to ask myself before going for any fundraise is, what type of business am I building, right? So, what's the market size of the opportunity I'm going after? What's the growth trajectory? Is it actually a venture play, or is it more of a traditional PE play? And again, either way, it's good. It's just you need to know what type of investor you need to go after. To the value proposition, and I know this is something that evolves over time, but before you decide to go to market the first time, you need to understand the fundamentals and kind of, at least in terms of the problem that you're trying to solve. For me, it helps me gauge kind of my own readiness and my kind of commitment to that problem and how I can sell the story to investors. And also how much I need to, really, how much do I need to spend to get this to the next level? So I've had a little bit of traction, but okay, today, if I go out and raise $5 million, does this mean I can grow 5-10x, or actually with 500K, I can actually potentially achieve the same thing? So understanding the type of business model that you have, is it resource heavy, not, and how much you actually need to really build and kind of take tangible steps to grow every day. And arming yourself kind of with the knowledge and understanding of your business model, then you start thinking about your raise, right? What's the amount that you actually need? Who are the right investors? Are you going after institutional VC players? Are you going after more traditional investors, individuals? but kind of having that knowledge really helps you gauge the approach of your fundraise. And then the valuation and the terms that you're able to attract investors at, right? So if you really understand the opportunity, the business, and at least fundamentally how you want to start, you'll be able to go to the market and say, okay, I can attract this type of investor at this valuation. It makes sense for me, my business, kind of, and my longer term trajectory. And I think we're going to go into valuation and everything else in a bit more detail later, but I think what's really important for you as a founder is to arm yourself with as much knowledge about yourself and really be honest and transparent kind of with yourself before you go out to market. And in going to market, reflect as much as possible from that learning and knowledge base in how you're approaching fundraising.
Yeah, and I want to double click on one thing that you said, which is like understanding what you need to get to the next level. How, I mean, even in your own journey, like how have you thought about actually what that next level looks like? Like, you know, saying I need to raise X million dollars in order to accomplish ABC. How have you gone about thinking actually like what is that ABC? What does it mean to be like reach the next level?
I mean, it's not an easy question to answer, right? But really, and a lot of times the assumptions you end up making end up being, I mean, potentially flawed or completely wrong. But the way I think about it, at least, okay, I'm able to, okay, I have my first couple of customers. What have I done so far to get these customers? Are they happy? What type of product am I offering them? And then what is that next stage for me? Did I start with a very basic MVP and now it's about kind of taking that tech a step further? Or is it about actually I've invested some amount in tech and now it's about making the model a bit more sustainable? So where are you and kind of what that next stage looks like is very different, I think for everyone. From our perspective, for example, I mean, we thought we would bootstrap for much longer, and we did for about 6 to 7 months when we realized us really going to market meant investing in legal infrastructure that was extremely expensive. That was kind of a very clear decision point. Today, we need to invest X amount in kind of really building out a legal infrastructure that we need to go to market properly. And it was kind of that iterative approach that led us down the initial, at least pre-seed fundraising journey.
Got it. Mukhtar, if I switch over to you, you know, like I'm sitting as a founder and I've decided, okay, yes, like the venture track is for me. I want to go out to market and try to raise some money. What do you kind of consider as like the right material stack that I should think about preparing as a founder? I mean, like the pitch deck is one that everyone kind of already knows, but what are the other types of materials or documents that I should think about preparing as I'm going out to pitch for investment?
100%. I think the biggest problem, especially in earlier stage companies, is that you start with the pitch deck first, right? Your pitch deck technically should be the last thing that you are writing. It's a culmination of everything else, right? Because every data point or every item that you are talking about in this pitch deck is the product of a lot of research, a lot of experimentation, a lot of data points that you've gathered, and that comes to it. So I think the materials, I think a lot of founders come out with a pitch deck and then it's sort of a mile long, inch deep kind of thing. There isn't a lot of substance to back it. There isn't a lot of thought to back it. I think if I would give advice to anyone is before you're doing a pitch deck, there are a couple of things that are staple, right? Your market size, calculations, and people think about market size from a couple of different dynamics. Everyone throws these huge numbers of, I don't know, how many billions of transactions, how many millions of money going, exchanging hands every minute. But in fact, you really need to focus on your revenue potential, right? What can you actually make out of that market? It doesn't matter how big that market is. As soon as you start to segment that market into what it means to you with a company, it starts to get smaller and investors cut through that. The second thing is, I think it would be good for every founder, he or she, to write a document about why they shouldn't do this startup. And your pitch deck is refuting every reason of why you shouldn't do that startup, right? Because if you think of it, every investor looks at a couple of tens of, if not hundreds of startups a week, a month, and you're always looking for a reason to say no. I think founders think that we want to say yes, right? You are filtering through a lot of different pitch decks all the time because you're a human being ultimately, right? It's a funnel of a lot of startups and it's venture. You're looking for the people who will always shine out from the crowd, let's say. So think of it this way. If your pitch deck is answering to the investor that reason of why they shouldn't invest and provides a compelling reason, then you're already on the right track.
Love it. Okay. Yeah, I love that exercise. Are there other things, you know, that I as a founder should think about preparing and like including in a data room? Yeah, like financial models. I know that one gets discussed a lot. Interested if you have kind of like a standard list of things that you check for.
Yeah, I think the more you have revenue, definitely financial models become very important. And even if you don't have revenues, I think financial modeling is critical because you would like to see how a founder thinks about the business, right? Beyond the words, how does that actually materialize into a set of tactics, into a set of strategy? It's your only, especially in pre-seed company, it's your only insight to the next 12-month plan beyond some bullet points on a nice PowerPoint. I think customer metrics start to matter a lot if you have sort of a pilot or you're in the revenue stage and you have consumer metrics, so churn data, retention data, average transaction, depending on the types of business, but consumer metrics and business metrics, and adoption metrics are really critical for every data room. And I think if the founders are building a technical product architecture and technical architecture documents are really critical to assess, especially if you're in your early stages, because it also assesses the capability of you as a founder to build sophisticated products, especially if you don't have revenue or customers to verify the robustness of the product. So those are the three things. Every other thing comes out of in conversation.
Okay. Yeah, I love that. And actually leads into a question I had for you, Hisham. If you're sharing a data room with an investor, and I think this is something that I see more common in the Middle East with MENA founders than other places, like, should you be trying to put an NDA in place with that investor? When does that type of thing come into the discussion when you're having investor conversations and correspondence and stuff like that? How should you think about protecting your business, your idea, etc.?
The best way to do it is to sort of use one of these service providers that limits who can download, copy. We usually don't sign NDAs. I know I'm not supposed to say it as a lawyer, but we don't. They're very hard to enforce. It's very hard and it just creates another thing you have to negotiate. And I believe, but maybe this is for Mukhtar, a lot of VCs won't sign NDAs, right? So he's shaking his head, right? So there's no NDA. Use the service and only share it with people you trust. And there's a common misconception: you can't protect an idea. You can only protect like your logo, an expression of an idea. So if you get a great idea for, I don't know, car sharing, you can't really protect that, but you can protect the name Uber. I wanted to ask, I'm getting questions. Should I answer or do we leave those to the end?
Yeah, I figure,
okay.
We can leave them for a bit. If they come up in conversation, we'll call them out.
Okay. So I won't deal with the questions. All right.
But also, I'll say if people in the audience have thoughts, on the questions that are coming in the chat, like feel free to start a thread on them too.
Okay.
Um,
In terms of what to include in your data room, just following off what Mukhtar said, and from a legal perspective, the hardest thing is to figure out your internal deal with your founders. Who's going to work full-time, who's part-time, who's going to quit his job, who's in charge of sales. That internal mechanics, sort of have that difficult conversation first, as early as possible. Because you'll agree when you're poor, you'll agree to anything. It's when money starts coming in, that's when you're less likely to agree. I think that's the only bit of advice we can give founders.
Yeah, maybe on that, in that same perspective, or like in that same kind of vein, be interested in hearing about how do you set up the right incentive structure, like at a very early stage when it comes to, your leadership team, but also your future employees. What do you need to have in place, and maybe also what is important from a cap table perspective? Like, how should you start to set up your cap table to ensure that it's clean, that it's attractive to investors, but that you as a founder are still maintaining a really good portion of ownership?
I think very early on, ownership should just be founders and maybe one or two key employees. When, especially in the Middle East, people run into trouble when they've got that uncle that gave them $10,000 and he owns 30% of the company, right? That'll turn a lot of VCs off. At least in the very early stages, ownership should just be the full-time founders. And then there's always a question between founders that are full-time versus part-time. The rule of thumb is the full-time founders take twice as much as the part-time founders. So, I mean, it's not exact, but that's sort of what we see over and over again. And be mindful of any sort of debt equity. Like if someone owns 10%, what are they doing for that 10%? They put in money, are they putting in effort? This happens a lot in some countries in our part of the world where an advisor would take 10-15% for opening doors. No, don't do that. That's not a good idea. But we have seen it a number of times where founders will believe and sign up and give some guy 10-15% of their company in exchange for door opening.
Rowan, in terms of like setting up my cap table as an early stage founder, like, is anything to add, I guess, on what Hisham's saying in terms of like best practices? How do I make sure it's clean? Like, I think that's something that's talked about a lot from investors. Oh, I want to see a clean cap table. Like, what does that actually mean, and how do I ensure that?
Listen, I really didn't think I understood what a clean cap table means until probably the last 12 months. It's not an easy equation, right? So technically, what is your cap table? So cap table, spreadsheet table, it lists kind of the people who own in your business, right? What type of shares they have, or what type of security they have, and what their percentage ownership is. But practically, your cap table actually ends up reflecting the partners and stakeholders that you've brought into the business over time, who've invested with you on day one, but then who end up really participating in your journey for potentially 5, 10, 15 years. So in that context, what the definition of a clean cap table becomes a lot more complicated. And for me, I think some of the main layers are, first, the mix of investors you have on board, chemistry, fit, their understanding of the business and the alignment. So do they know that they're coming into a venture type business that is high risk and potentially won't bring them any returns for the first 5 to 6 years? Or are they coming in because you promised them a 10% ROI in a year? So kind of who really like it, and we've really seen it in practice and how much this matters. Kind of, so who is that mix of investors? I think 2 is the consistency in investment terms and documentation. and especially in the early stage. Sometimes you see founders going out thinking, oh, this person or this investor is extremely strategic. I'm happy to sign a side letter giving them XYZ funky terms. A year later, you realize you have more side letters than you do actual kind of safe notes. And it really complicates what your cap table looks like as you scale and as you grow. So I think, yeah, that consistency in investment terms, so I guess side letters is one thing. The other thing is valuation caps and discounts. Try not to, just try to kind of stick to a very specific set of terms that you got on for your raise. 3, which again, I think is something I realized when speaking to a founder who accumulated maybe 60 to 70 investors in 3 years, the concept of governance. Sometimes you're going out, you're raising on safes, you don't really know the background of the people you're bringing on board. You've never actually run them through any screening tools. You've never done KYC checks, due diligence, anything like that. And again, as a founder raising, you're not thinking about any of that. But honestly, I don't know, at least from experience, I learned just having a basic understanding of who you're bringing on board throughout is extremely important. And make sure you maintain your records also. So a database of all the documents you've signed, everything kind of that you've exchanged with these investors, just so it's something that's easy to track over time. And then maybe if I want to think of another bucket is potentially and structure, I guess, of your cap table. So how many investors do you want to have on board? What's your minimum ticket, etc.? And these questions will help you determine, do I need to, for example, if I'm looking to raise from friends and family or angels with lower ticket sizes, does it make sense for me to bring them in through a special purpose vehicle or kind of group them under a single entity to kind of make sure I don't end up with too many people on my cap table? Or am I actually only going after institutional investors? So thinking kind of about the structure of your cap table, I think is important even from day one. I mean, you see a lot of founders nowadays, and I think this is very popular in the US, but going the route of friends and family, angel investors coming through investment vehicles or kind of special purpose vehicles. And I think this is gaining a lot more traction here as well. And it's important just because it really helps you kind of navigate your future fundraisers. It keeps your legal costs down as you go in and kind of work on your first conversion to equity round. It helps you maintain kind of operational efficiency as well when it comes to maintaining the stakeholders in the long term. I think this is my thought process around cap tables.
Very, very comprehensive. Sarah, I want to ask you a question as well, kind of about like, especially given that Viaka's community is a global one and people join it to get connections across different markets, like, is it realistic to think as, let's say I'm a founder in MENA, that I can go like pitch American investors very early on in my company's life cycle? And if not, why not? I'm also interested, let's say I reach a point where I could pitch American investors. What do I need to actually like convey to them as a founder from MENA to be successful in that? So a few different layers to that question, but I'm interested in your thoughts.
Yeah, it's a really good question. I think that there is still an education gap with the opportunities and the quality of companies that are coming out of the region. Personally, I don't consider MENA an emerging market. It's emerged to me. Part of my role has actually like unintendedly become really educating the local US ecosystem, which is a lot of the VCs, to understand that these, there are amazing companies coming out of the region. I think what the US investors really struggle with is understanding that at the onset, a large chunk of these MENA startups aren't necessarily looking to physically expand into the US. They choose to, expand further onto the GCC or go to Europe, et cetera. And the US investors tend to scratch their heads at that. So really educating why the business model may not be a best fit for the US market at that time is pretty critical. If you look at a company like Husby will probably never target the US. They've gone to GCC, they've expanded in Europe. It's just not that market for them. And so I think US investors are becoming a lot more interested in the region, obviously, because there's been so much buzz around KSA and this and that. But there's still that gap. And so I'm trying to fill it. But on the other hand, there's this hustler mentality that the Middle East has. I think that really resonates with the US culture that's so KPI driven and focused on, exactly to what you guys were saying, what milestones a company needs to, attain break even, that really having your numbers teed up and a clear path to profitability laid out for an investor is incredibly helpful for them. So at the end of the day, I think that having leveraging organizations like Viaka or with the SVB, we never promise introductions. We always check with the VCs first, but having a warm introduction goes a long way. I think it's really hard to be a foreign company, whether it's in, in Saudi Arabia or in Australia, wherever, just cold reaching out to an investor in the US. It's just a lot harder to do, whereas a warm introduction goes a long way. So I would highly recommend to leverage your networks, see who is connected to who. Obviously, LinkedIn is a great source, but your banking partners, your law firms, the summit communities like Viaka, I think, are incredibly helpful in getting you plugged in to opportunities that you might not have just doing cold reach out. So long-winded answer, but hopefully that, that gives some clarity and helps kind of bridge that gap. But I think the education piece still isn't there. And I hope we will get there soon for sure.
Yeah, me too. And hopefully these type of things contribute to that. Mukhtar, maybe a question for you that is relevant to any geography. If I'm going to raise I am starting to think about how much I should value my company at, what are the reasons that I should not just go for the highest valuation that I can get? I know that this is, fundraising can sometimes feel like a competition where the bigger the number, the better. But why is that actually, not really the case?
I think the first thing you have to start with is really understand that this is a number on a book somewhere that really doesn't matter until you go public or someone comes to buy, right? Until you hit the reality of it, this game of valuations is not real in and of itself. Yeah, it can help a founder get a loan, especially in the later stages of their startup, but the real number that you would get and the real valuation will be determined by public markets if you go through an IPO route, or by a buyer if you go through an M&A route, which is the exit, right? So starting from there should sober people up. I think the second consideration that people need to take is why they shouldn't go for the highest valuation is that as you grow as a startup, technically, if you look back and hopefully everyone succeeds in the route that they're going through right now, your easiest raise will be your first raise, right? Because it's a raise about an idea. It's a raise that technically has no fundamental operational metrics related to it. It doesn't have, you haven't proved traction, you haven't proved growth. It's just an idea tied to a number, right? And whatever starting point, 5, 8, even $2 million, it's such a high number just for an idea right there. Every other round after that is how much progress you've started from that idea. So the fundamentals start to matter. So if you start at a really high valuation, basically what it means that every subsequent round, you have to grow, hit, and beat that very high valuation with clear fundamentals. If you aren't able to grow, you will ultimately go to a down round. Lo and behold, you started with a safe note and then subsequently have a couple of safe notes. It becomes very dilutive. It becomes very negative brand signaling for follow-on investors if you keep doing down rounds, as we call them. So I wouldn't go for the highest valuation. I would go ultimately, also I understand the incentive to go for a higher valuation. I would go for the valuation that I think I can grow into and can beat comfortably in my next round. That's what the valuation marker that I think I should go for.
Yeah, that makes a lot of sense. In the interest of time, I want to make sure we do cover these questions in the chat. There's some good ones in there. maybe jumping around a little bit, but I see one from Ferris that Rawan, I think you'd be great to speak to. Do investors get alarmed if a friends and family round wasn't done through an SPV?
Interesting question. Listen, I think the issue is, I mean, again, you could have, I mean, is it 2 or 3 investors, or are you talking about 10 to 15? I mean, number one, what is the scale? And 2, listen, I think the reason why SPVs are important, specifically for these larger groups of investors, are really what a VC will look at eventually is, okay, in case I have decisions that need to be made quickly, in case I have certain kind of operational aspects that just need to be executed, kind of just throughout the journey, how many signatures do I have to chase? Am I going to face a lot of bottlenecks? Just really because from an operational and even cost perspective, these things start to matter, and you can't reach 50 people at the same speed as you do 6 or 7 ultimately. So I think even if you have raised friends and family round early on, you could still always kind of group these participants retroactively as you go raise your first equity round with a large VC. So I mean, it's kind of never too late to restructure or clean up from a numbers perspective your cap table, and we see that happen a lot in our region today, because I think the knowledge and education around why it's so important to maintain a smaller number of people on the cap table is only now becoming a bit more prevalent. So yeah, no panic, but yeah, I think it is important, and it's becoming a lot more important. And now that we're seeing the kind of Series C, Series D, later stage companies kind of grow and scale, you can't have these companies go around with 100 investors on their cap table. It becomes extremely difficult to maintain and manage.
Yeah, that makes sense. The operational aspect, I think, is often gets overlooked. Maybe I like this question because it's just like very tangible and concrete. When you're a founder reaching out to investors, like, what is actually the best way to try and contact them? This is from Rivant in the chat. You know, he references, is it an email? Should you try out their application portal? In some places like AngelList, I know you can reach out to investors as well. Maybe Mukhtar, but I'm sure everyone has their thoughts. Like, what's actually the best way for me as a founder to try and get in touch with you?
So I think cold outreach, I wouldn't say it doesn't work. It works, but not all the time. So 10% of the time it works, right? I think you have to be really crafty to write something that stands out in your email, in your LinkedIn message. I think also a familiarity, especially if you're using something like LinkedIn, if we have a lot of connections, if there's something that I can ask someone about this founder who's messaging me and make a reference point, that'd be great. But I think it does work, but I wouldn't bet on it. I think, as Sarah aptly said, I think you really need to find someone that can connect you to the VC. A referral is your best route to get an introduction to a venture fund. Or you catch someone somewhere and just go up to them and tell them about your startup. Don't be too pushy, because some founders take it to the extreme level, but either a face-to-face encounter or a referral from someone is the route that I would go for.
Yeah, agreed. Another question that was in the chat, Sarah, I think you did a great job addressing it. Want to see if anyone else wants to add to this, is basically like, what is the information gap that exists for VCs in the US, the American tech ecosystem in general, when it comes to looking at MENA? Like, what are some of the key points that just most folks here in the US don't know about when they think about the startup and VC scene in the Middle East?
Sarah, are you gonna
I mean, I
This
can
is-
add more to mine. I just think that,
Yeah.
you know, we're here so far away, and from a news perspective, like there's the only things that we're seeing are alignment with these big names. So like for instance, A16Z doing the $40 billion AI fund, that made waves and everyone was talking about it. $40 billion AI fund with PIF. I think that more pickup of core activities that are being done, like, you know, we're seeing these little things, but it for some reason it just needed an alignment with a big name, which is a shame because there's like these crazy deals that are being, you know, done in the region right now, and it's just not making like waves in the US. And so I think that yeah, I don't know how, but a broader journalism pickup of all the activities happening would really help that push. It's there, but it's just a lot slower. And yeah, we're seeing more things, I think, from a regional perspective with like Asia, definitely, obviously like Europe. But I think that there's bigger deals happening in the Middle East. So we're just not seeing it here. Like who covers the region, I have to like dig to really find out like what's going on. And dig, you know, I have access to like Magnet, and WAMDA publishes a bunch of stuff, and there's a bunch of other like news sources, but I know what to go for, right? And so I see them. But I think in the US, if you're not plugged into the ecosystem, it's just a lot harder. So I don't really know how to answer that. I can tell you that there's a gap, and this is what we need, but yeah, I just yeah.
It's an interesting enough. I mean, even for investors within the region, unless I mean, the Beckos of the world have a lot of information just because they have that private access there. They're within that network or group of people that are sharing information and deal flow on a day-to-day basis. But I feel like even within the region, although there's been improvement, but you see a lot of headlines about X has raised this much money, but it stops there. Like fundamentally, you don't. There's not much on kind of the metrics, how these companies are doing. You don't really have a lot of information even on valuations and how things are progressing. So even the news within the region for the region is a bit more high level and has less depth, I think, than how I guess it's matured in the Western world.
Well, I
so
guess
think,
I guess we have an assignment for Tasneem.
I'm really happy to hear that. Thank you, guys. This is precisely what we're building. So yes, please join the waitlist.
Great.
That's awesome. Yeah, I guess you know, feel free to keep dropping questions in the chat, but with the maybe 5-ish minutes that we had left, I'd love to hear thoughts about the future. Maybe Hisham, starting with you, like looking at the next 12 months in the MENA ecosystem in particular, like what are you excited about? What are the challenges that you see the certain ecosystems needing to overcome? Are the next 12 months bright? Just interested in kind of your forward-looking take.
Thank you. I think we're going to see a qualitative shift in startups coming up. And I think Mukhtar mentioned this. I don't think he used the exact words, but I think there's going to be something materially different coming out of the region. And my hope is it's something related to climate, especially water, things that affect our region more than, let's say, other places in the world. I think if we sort of take that on as an ecosystem, I think the next 12 months would look pretty bright. I don't know if we need another car sharing app or another marketplace. I think we have more fundamental issues that we need to work on. And there's plenty of money, plenty of very bright people, and it just needs to be directed to problems that affect our part of the world. That's
this is for everyone. Is there kind of like hope for dislodging some of that private capital and seeing it flow more into early stage startups in the region? Do you think that's something that we will see in the next 12 months?
I think if the deals make sense and it's something we know people need, and yeah, I think there's probably a reason why private money was sitting on the sidelines is they're just sort of looking and being like, really, people do this, right? So it's yeah, I think there's definitely going to be a shift in what's coming out of the region and the type of companies coming out of the region.
Sarah, Mukhtar, you guys went off mute, but I don't know if you have anything you want to add.
Michael, you can go for it.
No, no, I completely agree. I think the next 12 months, I think there are a couple of things that will shift this qualitative nature. I think certain business models have been overdone. I think the hype around just starting a company for the sake of starting a company will not be attractive to private investments anymore. I think the iteration, unfortunately for whoever wants to start a company right now, the low-hanging fruits of business model digitization in the region and the things that you saw, let's say, in more mature markets, at least from a venture perspective, the past 10 years have been done. Right now, if you want to innovate and play into this game, you have to really think about innovative solutions, very localized solutions, things that hit the pain point for some of these markets. So I think the next iteration of founders and companies that we're going to see will be 10 times more innovative than what we've seen today. I'm looking forward to it, even if there is a smaller number of startups that come out, even if there are smaller numbers of founders, the quality itself, I think, will be materially different just because of the competitive nature of the space right now.
Yeah, I agree. I agree, I guess, with everything you guys said as well. And maybe one more trend we've been seeing is you used to see a lot of startups start in the region for the region. And yes, I mean, Mukhtar, you also mentioned localizations, and we will see a lot of these models, but also we've been seeing a large influx of founders that are actually basing themselves here, but tapping into global markets as this kind of their consumer base or their customer base. I think the acceleration on that has been, I mean, significant, at least over the 6 to 9 months that we've seen. So you have a lot of companies choosing the region as their base and then targeting kind of global markets for growth. And I think that's really exciting because we first started to see the wave of kind of VCs coming and raising capital here and looking for LPs from the region. But now it's kind of expanding into also you're attracting very talented, smart people setting up shop here and then going after global markets. So I think that's interesting as well.
I think that's a really good point, Roman. I've had a couple conversations lately with potential clients, and some of them have actually been in France or some other regions that we're targeting going to MENA as like their first stop. And I think that that's becoming sort of a global hub. And I know like Hub 71, there's a bunch of different programs that are sort of incentivizing that. I know like in KFC, they're sort of doing the same thing at the garage, but bringing in international talent at that early stage, I think will also help develop a very global ecosystem at the onset. Then sort of waiting further down the line. I think that that's, and there's a ton of incentives, right, to do that anyways. So I think that spreading that knowledge, that, the reasons why you should come and incorporate and, build your company here in the region is because of X, Y, Z. I think, yeah, 100% agree. And I probably took that a little bit further than your point, but very, very much aligned.
Yeah, I love that. It's a really, really interesting new trend that we will definitely keep a close eye on. I know we're at 1 o'clock. 2 interesting questions came into the chat that I'll just throw out there for you guys if you have a couple minutes to go over, but no worries if you have to drop. One is about, should startups look to incubation and acceleration programs as a way to kind of ease the path to getting in touch with VCs? And then the one that just came in is, are there some VCs and angel investors from the MENA region who are investing in companies with MENA origin co-founders in the US that you know of? So yeah, 2 questions that I'll just put out to the group?
I can take the second one. I was just on a panel with Antler, and the person is based in Austin, but it was in San Francisco, and they're very much, we did a panel on investing in diverse founders. So that's very much the theme. They had a bunch of examples. So I think Antler is a great one. There's some other one. There's one in New York called Weave Acceleration, WEVE. But yes, I think that there's a ton of them that are encouraging diverse founders, and not just from MENA region, from just other, they're having cohorts from other international markets, and really dedicated to giving them resources to help scale in the US. And then I'll let someone take some of the other ones.
I think for the acceleration and incubation program, I think you have to really pick the acceleration incubation program. It's another signal that you give to the venture funds. I think the idea of just any acceleration or incubation program will help you, it's not true. I think the vast majority of them won't, and will send a negative signal. And I think there's a spiral of people doing acceleration, then incubation, then acceleration. It's sort of prolonging the life of something that is not picking up. So I think picking a good accelerator incubator program that has clear value proposition is critical. Other than that, I don't think it's going to be accretive for you as a founder.
Yeah, Hisham, did you want to add something?
Oh, yeah. I mean, yes, where you accelerate or where you apply is going to make all the difference. Not all accelerators are created equally. So be very, very careful.
Yeah, I totally agree. On the question also about funds from MENA investing in MENA origin founders, I think, you have to try to get in touch with funds, learn more about their mandate. I know that a lot of funds in the region do have like carve-outs that they can make for companies that are not based in MENA, but it's usually not a focus for the fund. And so you have to think about, is there a strategic reason why you might want to take capital from a fund in MENA as opposed to one locally? What signal does it show for like downstream investors if you do so? So it is a question worth studying. We definitely in Viaka want to facilitate also more like capital flows across borders, but it's something that is just really worth studying to see if it makes sense for your business. I think we're gonna wrap it up there. Really love this discussion. Thank you so much for joining, sharing your expertise. One thing to stay tuned for is we're looking to do our next virtual event to actually have startups in MENA pitching American investors because of all of the reasons that we kind of have laid out today about the ecosystem, building for a global audience, et cetera. So hopefully you four will be able to join, and the rest of the audience will be able to tune in for that as our next event. But yeah, in the meantime, thank you guys so much. We'll send a recording out to everyone, as well as folks' LinkedIn and contact information if they have more questions. So appreciate you all, and have a great evening, afternoon, day. We'll catch up again soon.
Thank you. Thank you, Hannah.
Thanks for having us. Thank you.
Thank you for having us. Bye.
Bye, everyone.